Hello traders and welcome to the Price Action Trader. Today I have a critical update on my most recent USD Japan long trade idea. The Bank of Japan just raised rates by 15 basis points, taking the interest rates to 0.25%. This is clearly a hawkish stance that has defied the market expectations. The market was expecting the rates to remain the same. This move has caused the USD Japan to dip below a very key support area, the 152 level, and this invalidates my previous bullish bias. Stay tuned as I dive into what this means for my trading strategy for this particular pair and how I'll be adapting to these new market conditions moving forward. Let's deep dive. First, I'd like to start with a recap of my previous trade idea. I'll also be attaching a link to the video. It will be at your top right corner of your screen. You can check out to see a detailed analysis of that idea. But basically, my trade was premised based off the quarterly bars. As you can see, I saw a breakout at the 152. I decided that I'm going to take a long position around the 152 once you got a retracement. We did get a retracement. I actually had a limit order right at the level. Usually for such trades, you want to have your trade, basically have a limit trade right at the level. My stop loss was just below this consolidation, and I did get close to 2.5R on this trade. As usual, as I've said many times, I usually split my risk into two. For this one, given it was a high probability trade, given it was premised off the quarterly charts, I did risk a little bit higher, more than my usual 1R. I think I was in for close to 2R. So the first 2R got out at 1R. Then the other trade, which is another 2R. So basically my total risk was around 4%. So the other 2R, I let it run. It was almost up to 4%. I think I did manage my stop loss, and I was taken out through... my stop loss was actually taken out by this candle, yeah. I did take another trade right as price was coming to the level again, and I'll just to scale down to the H4 so you can see the spike. You see this spike? I did get another 1:1 because my belief is that if a level has been established over long periods of time, usually it will hold that. So I got my 1:1. The other trade did not fulfill, but as you can see, the trade is actually now right below. Sorry, the price is actually right below the 152. This is caused by news. Remember, when you're looking at the higher time frames, whatever flows you're seeing, whatever direction that the market is going, is usually driven by a long-term fundamental view. So my trade idea, based off the quarterly bars, was purely technical. I do admit I did make a mistake not to look at the news that was coming out this week, yeah, which was quite heavy. I mean, given the BOJ decision is quite heavy, it has clearly tilted this market. And one trait that you need to have as a trader is, and it's a saying from one of the market wizards, he's called Peter Brandt. He says, strong opinions weakly held. Last week was long, I had a bullish bias, but right now my bias has changed. I'm more of leaning towards the bearish side, but I'll be looking closely at how this market plays out, especially given today we have very key data coming out. The FOMC, usually for such moves to happen, it's because of verbiage divergence. What do I mean? The central bank is one of the key entities that drives price. Actually, one of the key mandates of a central bank is to manage price stability in a market. So usually as a trader, you need to watch out for central bank verbiage. Is it dovish? Is it hawkish? How is the divergence looking like? And the divergence you can see through the interest rate differentials. For the longest time, the USD Japan pair has benefited from the carry trade opportunity. Usually banks will borrow in the yen given the low interest rates and buy and invest in the dollar and get the interest rate differential as a profit. But right now we are seeing central bank verbiage divergence from the two central banks, with the Fed coming out more dovish of late. We're expecting actually rate cuts in the US, and now we are seeing a more hawkish stance from the BOJ, Bank of Japan. What does it mean? It means the carry trade opportunity that has existed in this particular pair for the years is actually slimming, and the profits will not be much. The interest rate differential is still high, but this information that has come out has clearly tilted the market. So it's important for you to note that my bias has now shifted to the downside. And I think the market clearly was expecting this, to be honest. In as much as the market consensus was more of expecting the rate to remain the same, I think the bigger players, the institutional players, probably they knew the rate will increase. Yeah, from what I've been reading, I think the BOJ also leaked some of these news yesterday, preempting some of these heavy moves that we are seeing. And there's a phenomenon in the market that is called buy the rumor, sell the facts. I think when the market was up around the 160, 162 areas, I think the market was expecting a rate hike. That was a rumor, yeah. And usually, buyers will buy the rumor or sell the rumor, basically depending on the direction that they're expecting the decision of the central bank to go. For this particular pair, the rumor was that the BOJ will raise rates. So ideally, what you do, you sell your Japan. So I think the selling began here, and the unwinding of some of these carry trade opportunities was happening around this downtrend. And when it was actually confirmed, the volatility actually increases and it continued actually unwinding. So those guys who had not unwind the position are now unwinding, and basically that's how markets operate. Yeah, and just a recap for the benefit of the beginner traders, this is purely driven by fundamentals. The BOJ has eventually decided to hike rates by 15 basis points. The 152 handle has been taken out, so I'll be looking for it to act as resistance in the coming week, but I'll be careful. I'll be clearly monitoring price action around that area, given it's still a key area, but my bias has now shifted now to the downside. But I'll be waiting for the FOMC minutes that come out. For such markets, don't chase, just be calm and let the buzz print a story for you, then you take in the trade. So basically that's an update for this particular pair. I did get some profits given the amount that I risked on this pair. I think I took close to 3 trades on this one. Did manage to get something out before price action completely invalidated my idea, and the fundamental news that is actually driving this bearish bias took me out of the trade. So always watch out for central bank verbiage, always, and do not take a trade 3 to 5 hours before such key information is actually released to the market. That's all I have for now. See you next time. Thank you.